As Mark said, I'm Kent Smoll, past chair of the Kansas Board of Accountancy and the managing partner of Smoll and Banning CPAs in Dodge City, Kansas. I'd like to mention that my first NASBA meeting was the annual meeting in 1997 in Hawaii. That meeting was the first year after NASBA's moved to Nashville from New York, and there was considerable discussion around the accounting for the moving expenses. At that meeting, my now good friend, Bill Tracy, got up and said that NASBA didn't use any old Dodge City accounting in their financial statements. He didn't know me, and he didn't know that I was from Dodge City. Who would have thought 15 years later, I can now truly say today that we did use some good old Dodge City accounting in these financial statements. During the past year, I've served as NASBA's treasurer and as chair of NASBA's Administration and Finance Committee. As chair, I have the pleasure of giving the 2012 financial overview. You will find in your materials the NASBA annual report, and on page 46, the audited financial statements begin for the years 2012-2011. Management's discussion and analysis, the MD&A, precedes the financial statements beginning on page 40. On the screen, you'll now see the other 9 members of my committee. I would like to thank them for their service, as we had several long and exciting meetings dealing with the financial reporting of NASBA. We met as part of our charge, which is, let me get that, to oversee and monitor the financial operations of the association. NASBA's bylaws establish the Administration Finance as a standing committee to report directly to the Board of Directors. The role of the ANF is that it shall oversee and monitor the fiscal operations of the association. The committee fulfilled its responsibility by working with management and the Board of Directors as follows. During fiscal year 2012, the committee met 4 times with the executive, operational, and financial management of NASBA. The committee has provided MD&As on a quarterly basis in order to review the results of operations, inquire about variances from budget, and monitor the performance of the investments. The ANF chairman then gives a report to the Board of Directors at their quarterly meetings. Number 2, we have an investment committee, which is a subcommittee of the ANF. It's comprised of Leonard Sanchez, Ted Long, and myself. We met 4 times and then had monthly phone calls with NASBA's finance management and our investment advisor. Number 3, the committee received reports on the remaining 20% equity interest in PCS Holdings Company, which is the buyer of PCS. The report was from NASBA's representative on their board. Number 4, the committee reviewed the operational and capital budgets and recommended them for approval to the Board of Directors. Number 5, the committee reviewed the insurance coverage and management's assessment of the various risks for the organization. During the current year, the organization lowered its risk around short-term liquid investments related primarily to CPA examination candidate fees. This was accomplished through a fully insured money market vehicle, as well as using a non-interest-bearing bank account, and this was a substantial change. Through this process, the ANF committee has fulfilled its charge of overseeing NASBA's fiscal operations. Now, kind of getting into the financial. Fiscal 2012 was a financially sound year for NASBA. In the fall of 2011, workforce reductions in certain areas were made, and 2 new positions were added in order to reset the organization's focus on serving boards of accountancy and their operations and needs. Operations continued at a successful pace, and resources devoted to programs and boards increased. Investments faced some headwinds, as we all know that the recovery was more tepid than many of us expected. You will recall in the prior year that $7.5 million sale of PCS subsidiary provided a significant increase to the organization's unrestricted net assets. Part of that purchase price was a $2.5 million note to NASBA that the buyer could have converted to additional equity up through September 30th, 2012. Such a move may have indicated some disappointment by the new buyer over the PCS purchase, but the new owners elected to let the option expire and will make their first payment to NASBA on the note beginning this month. Let's move on to a high-level summary of this year's financial results. As far as results, operations for the current year were $1 million versus $500,000 in the prior year. That $500,000 increase is reflected in an increase in revenues of 1.1% and a decrease in expenses of 0.8%. Adding in investments, income in 2012 of $1.4 million versus $2 million in 2011. The prior year investment income was $1.5 million. You can see that in the red, which was much higher than this year's of $400,000. That difference alone was $1.1 million. As for the long-term investments, the overall portfolio experienced a positive return this year of 0.1% versus 12.2% for 2011. During the year just ended, the earnings through March 31st were pulled back quite a bit in the June 30th second quarter when the market saw a significant drop. From a performance standpoint, the investment earnings track the returns experienced across the market for the various asset classes in which we are invested in under the board-approved investment policy statement. Since January 1st, a big change happened, and that is that we have gone to basically a discretionary model with our investment advisor, and we have experienced returns in excess of the composite fund benchmark. That date, the January 1st, was the full date of implementation of the investment policy change, which was made in the prior year. And it is quite a change. It gives a lot more discretionary authority to our advisor, and all he is supposed to do is act within the confines of the policy, and it gives him a lot more latitude in choosing what investments are what he can use. And looking at the composite of the total investment income for the 2 years, you'll notice that the change in unrealized appreciation of the invested funds, and that is down at the bottom, and in the back you can't see it, but it's unrealized loss this year of $100,000 versus unrealized gain last year of 1.1. And that's the main difference in the decline in our investment portfolio. Back to the overall results, this slide shows that we have the operations, which are in blue, we have the investments in red, and then we have the earnings from the equity investment in PCS Holdings in the white. And you can see that this year it was a loss of $100,000, but that includes some additional expenses. That's not all just PCS loss. In spite of the decline in the investment income, you can see that we had a very good year. We had a $1.3 million return this year versus $2 million of $2.3 million last year. When you throw in last year the sale from PCS, the net was $7.2 million. We're comparing this year's net income of $1.4 million against last year's $9.5. The 1.4 is the actual increase for this year. Maybe. As I said in the beginning, fiscal 2012 has been a solid financial year. It may not have had the financial impact on the prior year's subsidiary as the prior year's subsidiary sale, but it did reach a different turning point, one of refocusing on the core commitment to the boards. This year's theme, Focus, has been demonstrated in the workforce realignment actions, the hiring of 2 additional state board focus director positions, and the reduction in overall expenses. As can be seen in this chart, we continue to see success in the financial results as we have grown from $26.9 million in net assets to $28.3. As always, NASBA seeks to balance its current fiscal capability to support boards with its objective of sustaining long-term financial stability. This financial statement strength gives NASBA the capability to support its member boards in the face of mounting challenges and the flexibility to help member boards in the ways that meet their unique needs. As chair of ANF, I am pleased to report to you the financial results for the fiscal 2012 and commend the management of the organization. In particular, I want to thank Michael Bryant, Troy Walker, and their staff for all their efforts in putting together all of the financial information. And that, Mr. Chairman, is my report.